Everyone for joining us today. We have Rachel Hersh, who's the sales director for North America at Prestige Capital. We've gotten to get to know each other quite some time now. Thank you to Prestige for also being a corporate member of Naturally New York. Definitely appreciate your support. Happy to get started on this mentor hour. And without further ado, Rachel, I'll let you take it from here.
Thank you. So thanks so much for offering this mentor hour today. And what I'd love to say is Adrian's been a wonderful partner. Naturally New York has been a really great place for us to spend some time together and meet, some of the food companies and get to know the partners that work with Naturally New York, and having this opportunity to speak to who's ever signed up today. As anybody who's on the screen that does know me, and I see some friends here, knows that I'm a very informal person. So you're not going to see any kind of slide screen show and any of that. I try to conduct things really as a conversation, and to start, of course, with a little introduction about what we do and how we operate, and then really open it up for questions and not have a question and answer session at the end, because I know that in real time you're going to have questions, and I will say things and you'll think of things. So it's really going to be ongoing, and Adrian will read the questions that come into the chat so that I can kind of look up and talk to you guys, and then she'll read them as they come along. So we're kind of get started here. So the topic is, who said you need equity when all you need is liquidity? A little background on me. I accidentally fell into the finance industry 25 years ago. My background is sales and marketing. And when I fell into this industry, what I realized is that I had never heard of invoice financing. The term for it is, accounts receivable financing. The bigger term that people might be familiar with in the vernacular is factoring. But factoring has a really negative term out there for some reason. And it's not exact, and people don't actually know what that word means. It means different things to different people. So on our brand new website, when you go to prestigecapital.com, what you're going to actually see is the new image that I created, which is an ATM machine turning invoices into cash. And the reason that there is that image is it is exactly what invoice financing does. It turns invoices into cash. What is the power of that? It means that you have invoices that are aging out and you need money sooner. You can sell them to a company like Prestige Capital and you're going to get money sooner. What is the benefit of having money sooner? You're going to have cash flow. And guess what? If you have cash flow, you may not need to raise equity. So by a show of hands, well, if I could see hands, if anybody had cameras on, when you watch Shark Tank, they say, oh, you have all these big orders, I'll invest in your company, right? But you don't necessarily really need that. What you need is to call a company like Prestige Capital and say, hey, I just got a $500,000 order to Target for my brand new whatever, juice or snack or coffee or whatever it is. You call us and you tell us, I have this order and I need to pay my co-packer faster than the 45 or 60 days that Target is going to pay me. Help. What should I do? And guess what? We're going to help you. So how are we going to help you? That's what we're going to explore here today. So if you're taking notes, you can start writing, or you can listen and record it. This will also be recorded and available later. So in addition to giving you advances on your invoices, what happens is when you go into your co-packer's office and say, we got a $500,000 order from Target, I want you to make my product for me and give me terms, that co-packer may say, I don't know you. Why would I give you terms? But if you say to them, well, I have an invoice finance company who's going to finance my order from Target, which means that the minute you ship to Target, a company like ours is going to buy that invoice and fund you. That is powerful. And they're going to see that Prestige Capital is around for 38 years, and we've been doing this for 38 years. So now you are not just a new coffee company, you're actually a company that has been respected enough by a finance company who believes in you to fund you. That's number one. That alone may now give your co-packer the reason to respect you and give you terms. If they don't believe that that's good enough, then we actually have a unique product called a supplier's assurance program. I don't know of any other finance company that offers this, and I'll walk you through it. It's also on our website. And what it is, it says to your co-packer, we as a finance company are going to buy these target invoices for which you are co-packing this iced coffee. And therefore, we are not making you wait for Target to pay this invoice to this coffee company. When we buy the invoice from Target, we will send you the money directly. That gives them a lot of assurance that they don't have to wait for you, the new coffee company, to pay them. They don't have to wait for Target to pay you for you to pay them. And they don't even have to wait for you to write that check to them or wire them the money. They know that a 38-year-old finance company is going to send them the money directly. So this program works so well with early stage companies that it is kind of the calling card for early stage brands to know that they can really go out there and have the confidence of a larger company to take orders. Now, I know that a lot of people may be attending the fancy food show at the Javits Center in a few weeks. I have been walking that food show for 25 years, eating delicious things. And as anybody knows, you know, the scrappy startup may have Whole Foods walk into their aisle and say, oh my God, this is amazing. I would like to carry your product in all my stores. And you're going to be terrified. And you're going to be like, oh my God, you know, what is the problem I have here? My best wish just came true, but now what am I going to do? How am I going to finance it? And you're going to think that you have to quickly get equity, but you do not need equity. You need liquidity. So what do you need to do? You need to call Prestige Capital. You need to call us and say, I just got this big order. What am I going to do? And I will give you a real example. A couple of years ago, we had a baby food company who had a small bank credit line for $100,000 with a big money center bank. And the bank said to me, I can't help this company grow because I can only give them this $100,000 line, but they really want to be in Whole Foods and all these organic, you know, stores, and we can't give them the growth capital. And they're afraid to have a big store give them a big order because they will not be able to support it. So I went down to Brooklyn to meet them and in Dumbo, and I was like, tell me what it is you need. And they said, we need to know that if we ship a product that we're going to have money immediately out of those invoices because we have 15-day terms with our supplier. And I said, not only are you going to have the money within 15 days, you're going to have the money from that invoice in 24 hours. So not only can you pay your supplier quickly, you can pay them fast, and maybe you could even get a cash discount for paying them early. So they were like, wow, that's amazing. So in fact, that is what they did. We had to pay off their bank line because we must have a first security interest in order to finance a company. I'll get into that detail in a minute. And so we became their finance company, and they were able to invite Whole Foods into their booth. Whole Foods, in fact, ordered from them, and they started shipping product. We bought that invoice and we funded it. They were able to pay their supplier immediately. They got a little bit of a discount for paying early. The product sold very well. They started shipping more. Within that first year, they went from being a company doing about $1.5 million in sales to doing $5 million in sales. The next year, they did about $7 or $8 million in sales, and they grew and grew. And then they sold to a private equity firm. We had another client, which was a celebrity liquor company. They were a very brand new company, but they were already doing over $1 million in sales when they met us. This was Skinny Girl. And they were not able to get traditional bank financing because a bank wants you to be in business 2 or 3 years before you're actually able to go out and get a loan. And they just needed the liquidity in order to pay their supplier. So the same kind of situation. They just sold us the receivables, and with that advance, they were able to pay, their supplier of the product. So when you think of it as it is a timing issue, it's not that you're not going to get paid or not going to get paid. It's all a matter of you need that cycle of liquidity. And that is what this is, which is why when you think of the concept of an ATM machine, which is the image, like I said, on our website, it's just giving you the money sooner so that you have that liquidity to pay your suppliers, your co-packers, that sort of thing. I can keep talking, but I actually want questions this early on so I don't go off on a tangent while you might have questions.
Would anyone like to, oh, go ahead, Jonathan. Would you like to unmute yourself?
Yes. Can you hear me okay?
Yes.
Okay. Thank you, Rachel. I just had one quick question. You were mentioning about the bank not wanting to give out a loan to a company that's less than 2 years old. And I'm just is that I'm looking at like small business loans, and I'm wondering, like, is that 2-year component also the same with a small business loan? Because my company is about a year old. So I was just trying to factor that in this conversation.
Yeah. So traditionally, most business loans, other than perhaps an SBA loan, but traditional bank loans, they look for historical. So they look for 2 to 3 years of business history in order to give a traditional loan. Now, the SBA and different programs like, the SBA type of programs will give maybe an earlier stage loan, but your traditional walk into the bank, fill out an application, they want to see 2 to 3 years of historical information. And speaking of banks, I have partnered with banks for 25 years for them to send me deals of every company that they cannot finance because it is too early, because it is not financially strong, or it was strong and it is no longer strong. And they send me 90% of my deals I get from banks. So a banker, as a good friend of mine at Chase quoted, he said, bankers are historians and companies like Prestige are fortune tellers. So what does he mean by that? A banker wants to see, what was your past? How were your sales in the past? Were you profitable? Were you successful? How much volume did you do? Were you profitable? And we at Prestige say, what are your future sales looking like? What is the volume you think you're going to have? What is your growth trajectory? Do you have a sales pipeline? What do your orders look like? So we look at very different things than they look like. And when you have a chance to pop around our website, I actually have a blog on the website, and I have a blog about that. It's called Historians versus Fortune Tellers. And I'll segue back on the bank point to say this, a little bit of like housekeeping about what are the criteria for funding. So there are 3 things that we ask any company before we can think about onboarding them. There are only 3 things we need at Prestige. This is not true of every factoring company, but this is true of us. In order to provide capital to a company, we need to have the first security interest in the assets of the company. That is under something called the UCC filing. That's the legal way that a company, like a finance company, whether it's a bank or a factoring company or any kind of company, shows anybody else that you, the finance company, are the one who has the rights to the asset. So the first thing I ask any company I'm about to onboard is, how are you currently financed? Do you have bank financing? Do you have a loan from the company you bought it from that has a note because you're still paying them for the business you bought. And are they sitting in a first lien position? Lien is spelled L-I-E-N. If in fact they have a lien, then we have to talk about, are we paying them off in order for us to have the first lien? And this is a little technical and we can go into the details at a later time. So Prestige needs a first lien in order to fund, the same way that a bank would need a first lien in order to fund. The second question that we ask is the company that we're providing capital to in North America, and is at least one of the stockholders a citizen of North America with clean credit? Because we want to know that we're dealing with people of good character. And the third question is, are the companies that you're selling to in North America, and are they credit-worthy entities, right? So if you're selling to a Target or a Costco or something like that, you know, that's great. And if you're selling to a little mom and pop, you know, whole, you know, natural food store, we're obviously going to be running credit if we don't know who they are. We also ask if you are selling to them as a regular sale or consignment. We don't buy receivables that are consignment because they don't really owe you the money unless they sell it. And if they don't sell your product, they're not going to owe you the money. So those are pretty important questions. They also have to pay the invoice within 90 days from the invoice date. So those are the three underwriting questions that we have. So when you're looking at, you know, growing your business, you have to think about what are the various mechanisms for how you can get capital, and at what stage are you looking for what kind of capital. And in talking to many finance companies over the years, I actually spoke to somebody who had a website which was for entrepreneurs, and he showed me on the website like the different finance ways that you can get capital in a company. And he talked about bootstrapping, angel investing, bank financing, equity, Series A, all of these things. And I said, where's the part about invoice financing and purchase order financing? And he goes, oh, yeah, I didn't really put that in. And I go, well, you have an entrepreneur website and you're not talking about like one of the main components of how people can get capital. So he went back into his website and he changed it, and he actually linked to our website. So I think it's a disservice that people do not recognize that you don't have to give up equity, not never, sometimes you do need equity, but to know that this may be a piece of things. And I will say this, that the company with this organic baby food that we funded about 8 years ago or whatever it was, they ended up, you know, growing the business so quickly and to such a greater number that when they eventually did that, they got a much better valuation. So you want to be able to show greater growth before you give up equity. Yeah, Jonathan, you have a question.
I just wanted to add into what you were saying based on two different companies that I listened to on a podcast, How I Built This. And one of them is Simple Mills, which is doing like 200 or 300 million now, and how the person always had not enough cash flow, not enough float, to the point where she had to take her parents' mortgage, like leverage a parent's mortgage. Luckily, she was doing so well, she knew that she was going to get it back. But I think having access to Prestige would have saved her and her parents a lot less stress on that, because it's really also a secure thing. And then the other one was Chomps, which is like a healthy version of a Slim Jim. And they sell that at Trader Joe's nationally. And they got their first order. It was a $1 million order. And they were scrambling to figure out, how are you going to finance this? So I already see two examples of food companies, because I'm doing a food company, that need exactly what you're talking about.
Well, thank you. And it's funny that you mentioned mortgaging the house, because I actually partner with Damon John from Shark Tank. And when I met him and his team at an event and we became friendly, he said, wow, I wish I knew you before I mortgaged my mom's house for FUBU. So he had the same exact problem. And it kind of kills me that people like that, like entrepreneurs who have these businesses and get these orders, they don't know that there is this product, and it's not taught in business schools, and it's not really taught that much. So for example, I have a client who's an adjunct professor at FIT. I have taught classes for her at FIT to those students so that when they go and build their makeup brand, they will know that this kind of financing exists. I'm doing this mentor hour. I've done a ton of, webinars and seminars because like I said, I don't come from a finance background. And when I learned about this industry, I'm like, I don't really know much about it. My friends who are accountants don't know that much about it, and they know a fraction of what they should know. And so I kind of make this my mission, but I'd love to have questions, and I could always keep talking, but I really like to have questions before I kind of just keep going.
Raquel, if I may. Good seeing you again. It's been a long time.
Yes, it's been a while, Stephen. How are you?
Good. Just in terms of the financing that you provide to younger companies, are these type of financings recourse or non-recourse? And if it's recourse, do you also require personal guarantees?
Such a good question, Stephen. Thank you. And let me explain what the terminology is for those who don't know. So recourse means that if the customer, let's say Target, doesn't pay the invoice, does that debt go back to the client who I'm funding? And non-recourse means that we, Prestige, take the risk unconditionally, right? So I'll answer that question first, and then I'll answer the second part second. Prestige used to be completely non-recourse, meaning we took the credit risk for 90 days from invoice date. And the only recourse was for bankruptcy, meaning so we were a non-recourse finance company where we took the credit risk for bankruptcy of your customer. So it means that if, let's just say Bed Bath & Beyond, if we bought invoices and within 90 days, Bed Bath & Beyond went bankrupt, we would have taken that loss because we bought the invoice and then they went bankrupt. In COVID times, our credit policy changed, and we do deals as recourse unless the client is domiciled in New York or California. So in those two states, we do non-recourse, and in other states, we do recourse for legal reasons. However, we do not take a full personal guarantee from the client, as most finance companies do and as banks do. The only guarantee we take from the client is called a validity guarantee. It's also called a good guy guarantee, and it's also called a fraud guarantee. I'll explain what it is. If somebody sells me receivables and ultimately their customer, doesn't pay over time, we're going to get our money back from that client through new invoices that they sell us and whatever. We'll work it out over time. But if they out and out send me phony invoices, fraudulent invoices, there's really some monkey business going on, then under the fraud guarantee, we're going to go after them for the money that they owe me. So we don't have that personal guarantee. We're not looking to, clobber them over the head if one of their customers goes out of business and they owe us the money. We'll get it back over time. But if there's a real fraudulent situation, then we're going to go after it harder and faster and sooner. We are one of the only finance companies that does not take a personal guarantee. And the other thing that makes us unique, and I can send around the one pager, or you can find it on our website, we do not require financials nor tax returns in the underwriting process to onboard any client. So when we onboard, those 3 points that I brought up before, looking at whether we can have a first lien on assets, whether the owners of the company have a clean background, and whether the receivables perform in 90 days or less, that is our onboarding. And so most finance companies are digging into your financials, your tax returns, all of that kind of stuff, which is why it takes them a long time to close a deal and why it's very cumbersome and intimidating for a new business. We don't look at that. We put on blinders to everything except for, do you have good receivables? because we are turning your receivables into cash. So everything we ask is about the receivables, the quality of the receivables, who are you selling to, what's your program with them? For example, if you're selling, let's say to Target, do you have a program with them? Are there shelving allowance, slotting allowances, advertising programs? What dilution might there be on the invoice because they're putting you on sale for Memorial Day or whatever it may be? So that's the kind of questions we ask. Thanks, Stephen, for the question.
And actually, Rachel, I had a question actually right along those lines. So, we sell to a lot of distributors, like the UNFIs and KHEs of the world, and they're of course notorious for deductions. So actually just wanted to get insight into how you deal with that or think about that. And part of it too is, we're just starting to work with these distributors. So at some level, we don't even know how much deductions they might take.
So UNFI and KHE, for everybody here who doesn't know this, they are distributors in the natural food space. They kind of own the landscape, and they are the worst. They are the worst because they don't really disclose what their discounts are going to be, and they do whatever the hell they want. And we have had a lot of problems with that because you don't know what you don't know. You think you build an invoice for $100 and maybe you're getting paid $65 or $50 or $75. So what we try to do is not buy your very first invoice from them. We try, when you're only dealing with them, if you're dealing with a regular store like Target or Costco, we'll buy your regular invoices. But when you're dealing with them, we actually need to see a past pay history to see what is the historicals of how they're paying you. So if they're really doing this crazy deduction where you're making $65 out of $100, then what we do is we buy your invoice as if it's $65, not $100, and we do our advance on the receivable against it as if it's only $65. So let me talk about the advance rate of an invoice and what that means, what I'm talking about when I do an advance. When we fund invoices, we don't give you 100% of the invoice right away because we don't really know that you're ever going to get paid the full amount. So no invoice finance company buys an invoice for $100 and gives you $100. There is an advance rate they give you. So typically on product related businesses, the way it works is like this. We do a 75% of the invoice advance right away. So it means you ship, let's say, to Target tomorrow, you sell me a $100 invoice and I give you 75% of that tomorrow, $75. When Target pays the invoice, the money comes to our lockbox. If they paid $100, I now owe you $25 minus my fee. Let's just say, for argument's sake, my fee is 2%. So I give you $23 back, and that closes out that transaction. Okay. In the example that we're talking about with KHE and UNFI, the $100 invoice may not really be $100. So if it's only $65 because of all their crazy deductions, my 75% advance, I wouldn't even give you a 75% advance. I would actually pretend that invoice was only $65, and I would give you a 75% advance of the $65 invoice. And I would treat it as if its value was really only 65. And so I would give you 75% advance of the 65 and then give you the 25% balance minus the fee later. And if they paid you more than 65, we'd adjust that, of course, on the back end. But that's what we had to do with the baby food company because they sold to UNFI and they sold to KHE, and every day the deductions kept changing and changing. We did this also, we had an iced tea company, and all over the map, the deductions were crazy. Every day it was different, and we kept having to lower and lower and lower the advance rate. And so we would rather have to, fix it later than just have to keep clawing back from the client. It was just very messy. Yeah, but that's a good question. And yes, be very careful and read the fine print and try to push back as much as you can. I know you want to really sell your product, but they could strong arm. And by the way, for anybody out there, if you're out there trying to sell, the best thing you can do is come in with some strength and some knowledge and say, I know that there are deductions, but these seem unorthodox compared to other companies. I listened to a webinar about this in my food network, and this seems unusual. So go in with some power,
We have a question from Brian Lee. Brian?
Hey, how you doing? I just had a question just in terms of what is the fee and maybe the ranges and what are those factors that influence the fee? Yeah, if you just talk a little bit about that.
Absolutely, yes. So the fee is predicated on two things: how much volume a client is doing with us, and also how long it takes for the invoice to get paid. So I will give you an example. So Prestige Capital deals with companies that have a sales size of 2 million in annual sales up to 300 million in annual sales. That happens to be our particular zone of size that we deal with. Now, I know that there probably are people on this call that are not yet hitting or will hit 2 million in annual sales. That doesn't mean that I'm not happy to chat with you, that I'm not happy to help refer you to colleagues in my network that fund smaller companies. But for Prestige Capital's program, you have to be able to demonstrate that you will be able to sell us $2 million of volume within 12 months of a contract. So I'm just putting that out there, not to scare anybody away. I don't know that anybody has a crystal ball to know that you're getting there, but just know that you can reach out to me and say, Rachel, I'm only going to hit 500,000 this year. What can you do for me? And I'll say, here, meet my friend so-and-so. Her firm does smaller deals. So that's number one. So for us, because we fund companies from 2 million up to 300 million in annual sales, obviously the larger the deal, the cheaper the price, like anything else, a volume discount. So our fees range from 2.25% per month of finance charge to as low as 1.1% discount as of the fee. And that fee is for the first 30 days that funds are outstanding. And then they tick up the longer we're waiting to get paid. So they go up by a third of whatever that initial number is for each 10-day increment that the funds are outstanding. So what that means is you sell me an invoice on June 1st and it pays July 1st, your fee is 2.25. You sell me an invoice June 1st and it pays July 10th, your fee is 2.25 plus 0.75, because you added a third of the initial fee, right? So 2.25 divided by 3, 0.75 per each 10 days. So the each 10-day fee, the clock runs out till 90 days from the invoice date. So that's how the chart runs. I kind of liken it to a taxi meter, the kind of way that you get in a cab and it says the first mile is, this fee, and then on a taxi, each quarter mile is that additional percentage. It kind of works the same way. So when a client calls me and they say, my volume is 20 million a year or 50 million a year or 5 million a year, or whatever they tell me, then I tell them your range of price will be this, right? Because it's based on where you fit in the volume chart. Okay, did that answer the question?
Yes, and just going along with that. So that's based off of the timing given up front from the company, right? So let's say it's a retailer and it's net 60. You do the rate based off of that because you take on the invoice. If they don't pay within 60 days, that doesn't change anything for us, right?
It's based on when you actually sell us the invoice and we fund you till the day they literally pay it. So for example, you may invoice target, let's just say June 1st, but you don't need the money on June 1st. So you may sell it to me June 15th and they pay you July 25th, let's just say. So it doesn't matter what your terms are. It matters what day I gave you the money and what day your customer paid. So it's about how long the money is actually outstanding from us funding you till us getting the money in to our lockbox from your customer. Because the way it works is Target or whoever you're selling to, they are directed by you to send the money to us directly. Okay, so when we get the monies in from your customer, that's when the clock stops ticking on the fee. So you're not required to sell us the receivable the day you create it. You can hold it for a few days or 30 days or 45 days. You can hold it as long as you want, because the minute you sell it to us and ask for money, that's when the fee begins. And when your client pays the money, that's when the fee stops. So you really want to, be careful on when you sell it, so that you can limit how expensive the fee is if you don't need the money yet. Make sense?
Yeah, makes
Thank you.
sense. I have one more question too, just on the fees. Do you all ever work with the clients, or maybe in some cases they have brokers to push back on the fees or the deductions? To push back, I'm sorry, push back on the chargebacks and deductions from
Yeah.
distributors or
No,
retailers?
no, that's not our world. No. No.
Okay.
Okay.
Would anyone else like to ask a question? This has all been very interesting on my end.
Okay. So no questions. I mean, we could keep going. Obviously, I always like when there's questions so that I know where people's heads are at before I just kind of keep going. Adrian, I think there were some questions that people submitted yesterday.
I did want to ask, okay, so doesn't your company need to be in business for a certain amount of time? In order to,
Excellent question. Interestingly enough, the answer is no. And this is what I think is so cool about this kind of finance product. So you could literally have created some new kale potato chip at your kitchen table, and you go to the fancy food show and you share a booth with somebody because you can't even afford the money to pay for the booth. And somebody could walk down your aisle and say, this is the most delicious kale chip. Where do I get this? How do I get this? I want to place a huge order. And you can suddenly be in business, and you could literally fund a huge purchase order and fund an order with us. So no, you do not have to be in business any amount of time. And that is one of the really cool things about this, is you can go from zero to being really big. I will tell you a very interesting story. We recently had a client who was selling her food product direct to consumer. It was a really cool product, and one of the big retailers got wind of this product and said, we want you to be in every store across the country exclusively, signing up with just us as the retailer. And their first retail order was $1 million a month. $1 million a month. So they went from direct to consumer, where they were doing nice business, but $1 million a month. And so they were introduced to us by a consultant, and their first month of sales with us was $1 million a month. Now they're up to $3 million a month, and they're not even with us a year. So this is the kind of thing that can happen, I wish, for all of you out there that have food businesses, which is you have a good product, you put it out in the universe, whether you're doing direct to consumer or you go to the food shows or whatever, however you're promoting your brand, it's something that can be that dream come true, right? And I'm here to help in any way that I can. I mean, I play in the food space pretty heavily. I know a lot of colleagues, so if you, want to talk to me one-on-one about, what you're doing, and I'm happy to connect you to any connections that I have. I don't see anybody's faces. I don't know what brands you have. If you want to show your face and pitch your product or tell anybody on the screen, hey, I have this chip, I have this coffee, I have this thing, this is a place to showcase. It doesn't have to be me talking the whole hour. It's a mentor hour, but it also could be a getting to know you thing. But definitely, this is all about community and about connection and, you know, helping early stage brands. Like when I went to my liquor store and I asked them why were they not carrying this brand that was my client, they're like, oh, we don't have room for more products right now. And then I went in a month later and it was an end cap on the shelf. And I said, what happened? And he said, well, everybody came in asking for it, right? So it's that kind of thing. We funded another liquor company. I don't know if you guys know the brand Vodka. It's the Polish vodka that had those big signs on the West Side Highway that said something like Hampton's quality, Jersey Shore prices. You know, and they had all these tongue-in-cheek kind of things, you know? So I like to promote the brands that I'm helping. And even if it's a brand that I'm not funding, you know, I follow people on Instagram. I share that within my network. So, you know, if you're making a cute product, like I'm happy to share it and promote it and eat it and drink it and whatever it may be, because I'm a consumer at heart. You know, what I love about the clients that I help that are, you know, food and beverage brands is I can eat and drink it, you know, and be a consumer and share with my colleagues. Were there other questions, Adrian, that you have from yesterday that was sent in?
Yes. How quickly can this be set up and funding be provided?
Oh, yeah, we love that question. So we fund deals in a week. And what I mean by that is if you currently have invoices for product that you have already shipped, and you can sell those to us now, then we fund you in a week. If you have orders upcoming, then we onboard you, getting you ready to ship that product. So here's a story that's actually in real time right now. One thing that's also important, I don't know if any of you are dealing with CBD or CBD infused products. This is a very hot category right now. We are one of the few companies that will fund CBD and CBD infused products. So if that's something you're getting into or want to get into, we are your people. So this is a CBD infused product that is a product that is right now about to launch, and it is celebrity owned, and it will be gangbusters huge from day one, but it isn't, they don't actually have the order yet. But we have already signed the contract and have everything in the drawer ready for the first order to ship. The first order will ship in July. So talk about, it's a startup. The contract is signed, the volume is there, but I can't fund it yet, but I signed it up already. You understand what I'm saying? So we can fund in a week, but I have to buy the invoice in order to fund. So it's all locked up and locked down, but I will have to wait for the invoice to ship. So if he had shipped the order already, I would have funded it already, but I signed contracts already and we're all ready, but we're just waiting to buy the invoice to give him the money. So that's how that works.
You might have addressed this question already, but I'm going to ask again. Do you have to sell your product for a certain amount of time prior to utilizing this financing?
No, you don't. But back to Marilyn's question, if you're selling to UNFI or KHE, you have to demonstrate what your deductions are with those two. And I know that a lot of people in this space are selling through them. And that is something that is only to those distributors do we look for history. So you don't have to be selling to any other retailer or distributor for a particular amount of time, but when you're selling to them because of their crazy deductions, we would look for history there. Yeah.
Does the company need to be profitable?
No. And back to the original comment that we made or that I talked about is that we don't look at financials, we don't look at tax returns, and therefore we don't even know if you're profitable because it's not part of the equation of what we're doing. And I deal with a lot of colleagues in my industry who I sometimes give my smaller deals to, and I say, they have great invoices, they're shipping to this thing and that thing. And then I ask them like 2 or 3 weeks later, did you end up funding that company? And they go, well, I'm still waiting for them to send me financials. And I'm like, why do you need financials? They're selling to Target. Like, they're a new company, they're selling to Target. they don't have the money to put together financials. Like, that shouldn't be part of the equation. They're like, well, our company looks for financials. And it's like, it's frustrating because I know that if our company could do smaller deals, we would be able to underwrite that deal and get them funded. But like, we just have a certain threshold for size for entry. But if there were a small company like Prestige that did smaller deals, we would have onboarded these company, because we don't need you to be profitable, because we don't need your financials, you know?
How large can the orders be that the finance company would be interested in funding?
Oh, we love big orders. So this is funny because people say, when I walk the fancy food show, I say, if you get large orders and you need some wherewithal to fund it, call me. And they're like, well, I'm going to start small and get there. And I'm like, no, don't start small. Nobody wants to fund your $10,000 order. Nobody's getting out of bed for that, and nobody can start there. You can fund orders that are a couple of 100,000, that are 100, 200,000, you know, or in the aggregate that are that size, but nobody's funding a $10,000 order. You can fund that on your credit cards, you know, like friends and family. So $1 million order is great. A $50, $100, $200,000 order is great. So the larger the order, the more you will have a finance company interested in you. And that doesn't mean it has to be shipping to one store. It could be, let's say, Costco, drop ship in, you know, stores in one region, or drop shipped across the country, or whatever it may be. You may have a small test order in your region, and that's $20,000. Fund that on your own. Nobody's funding that for you. But when they say, okay, your test order went well, now we want to take you nationwide, that's when you want to call us, because that's when we're going to get excited and want to work with you. Oh, want to talk about something else, direct to consumer business. Some of you may be selling direct to consumer. And when you're selling direct to consumer, what you're going to need is somebody to fund your inventory that is going indirect to consumer, right? That is not funded by us, but is funded by companies that fund inventory. My friend was on this call before, but I guess she dropped off. Her company funds inventory. So if you are, any of you selling direct to consumer and have inventory finance needs, you can reach out to me and I can put you in touch with her. But again, it needs to be a little bit of a bigger size company, because again, they don't do tiny deals. And small deals, you know, you could probably put some of it on your credit card, friends and family, bootstrap, that sort of thing. But the direct to consumer model, what we are seeing is that people that start off direct to consumer, they are getting traction in retail, because retail is really following the people that have good engagement and that have good following on Instagram and other social media. So I look, when I get introduced to a brand, I go on their Instagram, and if they have like 40 followers, that doesn't really show me that they have a lot of interest, you know? So you really need to think about, what are you doing? I went to a trade show at the Javits Center called Vin Expo, which was a liquor show. And one of the brands there had a really cool charity give back, that 10% of their charity went to a particular thing. 10% of their sales went to a charity. And I said to them, you have such a great give back and you should have a fun TikTok about it. And they were like, well, we don't know. And I started like rapping in the moment, like what their thing should be. And they're like, oh, wow, that was such a great TikTok. We should video you. I go, I'll do it again. And they videoed me and I made a TikTok video, right? And it's that kind of engagement that you need. You know, right now, everything is about eyeballs. So like, what is it that you're trying to do? And you have to make your brand known. If anybody watches Shark Tank, you know, like, how are you going to get yourself out of the crowd of selling whatever your product is? It's having people see you and know you and taste your product and love your product. And I've been on a lot of like competition things in the food space, and people, you know, pitch and then they want feedback. And I'm like, what is making you stand out. You have to do something that makes you stand out, whatever that may be. Maybe it's giving out free samples. Maybe it's just doing something that's visually fun and funny, but do that, because eventually you will get seen and known, So I'm happy, like I said, to share anybody's stuff on my LinkedIn or on my Instagram, because my background is sales and marketing. So that's how my brain thinks. It's always about that. Questions? Anybody want to share their brand while they have a commercial here that's free? Who wants to share about their brand? Wow.
Don't be shy.
Maybe I'll jump in quickly since will be at Summer Fancy Food Show. So I'm the co-founder and CEO of Fun Gal Snacks, which is the parent company of Papadelic's Crunchy Mushroom Chips. We're reimagining shiitake mushrooms for the modern superfood snacker. Definitely don't have to be a mushroom lover at all to like our product. In fact, mushroom doubters tend to be our biggest fans. Super crunchy in texture, like a crouton or potato chip, but made with shiitake mushrooms. We have 3 flavors, are all vegan, gluten-free, non-GMO, and kosher. Been around for about a year. We're not quite at the size range where we would be working with you yet, but definitely would love to connect offline in case there's any of your colleagues who would be, I guess, in our size range. I think in particular, we're big believers in alternative financing. We're a completely bootstrapped company and big believers in retaining, especially creative control in the very early stages of our brand. I think in many ways, we're kind of pushing the envelope of our product in general. And I feel like we don't have a lot of institutional support pretty much, but that's exactly the point. I mean, if it were mainstream, others would be doing it, and that's what it takes to create an innovative brand. And so I think because of that, for us in particular, we're again personally very passionate about alternative financing. I do come from a private equity investing background, so I know how things are in institutional investing, and pretty much people, even the VCs who say they are looking for innovation, they're not really a lot of the time. So I think, down the road, I'm also personally passionate in investing in other people's businesses as well. But right now, of course, all my bandwidth is on Papadelic's personally. But before founding the company, I actually did a bit of angel investing as well.
I love everything you said, especially the mushroom that snacks like a chip. You had me at hello. That is like me, everything. Love mushrooms, love chips. You must email me what booth you are at the show, because I'm going to be at the show. I also take tons of pictures at the show, and I put that all over Instagram and LinkedIn. So I'm going to take pictures of your booth and take pictures with you. And I also know investors in the food space. So we should definitely talk.
Yeah, we'd love to meet in person there.
Yeah. Okay, what is prestige financing fee? We talked about that already at length, so we'll email about that later. Yeah, so that was great to talk about your product. So if anybody else, we have 5 minutes left, I guess. Anybody else want to share about their brand? This is your floor space. Jonathan?
I can go next.
Yeah.
Yeah, and it kind of flows right into what Marilyn was talking about with mushrooms. And it's so nice to see that mushrooms are really getting a lot more limelight than they were in decades past. So my product is a hybrid it's a hybrid meat product, and it is 50% mushroom, 50% beef, and it works just like regular ground beef. In fact, I've done it not just with beef, but with lamb, pork, bison, and it in a ground meat format. So whether it's hamburgers, meatballs, all of the ground meat that is available in our regular cuisine or ethnic cuisines, it basically just makes it more flavorful with the mushroom component, but also cuts the fat and cholesterol in half. And the other ingredients that I add, natural ingredients like beef collagen, actually increase the protein volume. So it's better for you than regular beef, but better for the planet as well. And I've already seen one of my mentors, he's based in the New York area. His name is Phil Wong. He created a product called Phil's Finest, and he went on Shark Tank during COVID. And I think he got 3 different investors to send him an offer. So his product doesn't use mushroom. It uses beets or carrots, something that I don't think are as premium. And
Right.
it has a thick sauce, where mine is more like in a naked format, so that the restaurant or the end consumer can manipulate the product like they normally would. So it's a very, very easy exchange from what they normally buy.
Mushrooms really mimic meat. My friend is a plant-based chef and she makes me food all the time. And when you eat mushrooms, you feel like you're eating meat if it's done right. So I would love
And
to, I would love to. Are you going to
Yeah.
be at the fancy food show?
I'm considering it. There's a few other things going on, but I'm here in Chicago. I was actually, there was the Naturally Chicago pitch competition. I participated in that. And then there's National Restaurant Association, NRA, was here in
Reach out to
Chicago
me.
2 weeks ago.
Let's chat offline. Would love to stay in
Okay.
touch. Natalie, you've turned your camera on. Hi.
Hi, y'all. I'm Natalie, and I have a coffee brand. So we
Oh, I said coffee. Look at that. Okay.
yes. So we offer people a simple way to brew fresh coffee, and we're also really early pre-revenue launching next month. So also a little early for Prestige, but definitely want to keep in touch. Yep.
Absolutely. Thank you. Good to see you.
See you.
Natalie, you didn't mention the name of your brand.
Oh, it's called Hooked Coffee. I will put it in the chat.
Oh, I love that. And I am a big, big coffee person. So yeah, this is lovely. Is there anything else anybody wants to say? I think we're finishing in about a minute or two, right, Adrian?
Yes, yes, we are. Would you like to make a closing statement before we all depart?
So the closing statement I want to make is I really love this chat today. I love that it was interactive. I thank you, Adrian, for having me, and Naturally New York for this platform. I love this organization. Well, we all love food and drink. So, and, please keep in touch with me, everybody. I think Adrian dropped my info in the chat. I believe I'm going to reach out to the people that registered on LinkedIn. I post a lot on LinkedIn, events that I'm at, things I'm going to, things I know about. So if you're interested in just kind of like knowing what's going on around town and events and seminars and webinars that I may be doing or involved in, I think education is key to just being a person in this universe and knowing what's going on. And I'm also interested in anything you guys know about, or people that that might need to know, what we do. Like if you have friends that have a business that's a little further along, or you have advisors that that should know me, or vice versa. Like I'm a big connector in the universe and love to do the same. So please do that. Thanks, everybody. And have a great spring day.
Thank you, Rachel. Truly appreciate your time.